Are you hungry for the latest news and trends from the internet? Welcome to What's Cooking on the Internet, your one-stop shop for discovering the hottest digital delights. Hit that subscribe button and let's get cooking.
The stock market's wild swings have people wondering if it's a harbinger of a global economic crisis. Leave a comment with your thoughts. For the past 2 weeks, the stock market has been on a crazy ride, leaving investors and economists scratching their heads with the market's value fluctuating wildly. It's no surprise people are getting anxious. But is this just a normal market correction, or is something more serious going on? One thing's for sure. The current situation is unprecedented. New York University Stern School of Business professor Scott Galloway pointed out in his newsletter that the recent market swings are unlike anything he's ever seen. It was GameStop. But for the entire market, he said, we saw $1.50 trillion added to the Magnificent Seven in one session, only to drop 1,000 points the next day. That's not a market. That's chaos. So what's behind this chaos? Some say it's the result of a single decision made by a US president, which could be implemented at any point. Others point to the growing influence of meme stocks, which have junk ratings and are now putting the entire economy at risk. What are the implications of our stock market becoming a meme stock? Asked Ed Elson, co-host of Galloway's newsletter. Meme stocks all have junk ratings, and now we're putting the entire economy in that position. One way to measure the market's anxiety is through the Chicago Board Options Exchange's Volatility Index VIX. Often called Wall Street's fear gauge, the VIX measures the market's expectations for volatility over the next 30 days, based on S&P 500 index options. A higher VIX indicates anticipated market turbulence, while a lower VIX suggests relative calm. The long-term average is around 19, but the VIX recently reached 65, indicating high market volatility and increased investor fear. But what's really at stake here? Some say it's the creditworthiness of the US. What are the implications of our stock market becoming a meme stock? Asked Elson. Meme stocks all have junk ratings, and now we're putting the entire economy in that position. Others point to the dollar's decline, which has fallen 3.4% since last Tuesday and 9.2% since mid-January. This is extraordinary by currency standards, and it's a sign that global investors are losing confidence in the United States. So what's the takeaway from all this? One thing's for sure. The current situation is unprecedented, and it's a sign that the global economy is facing some serious challenges. While some people are laughing off the situation, others are taking it very seriously. As Galloway pointed out, what happened this past week was unlike anything I've ever seen. It was GameStop, but for the entire market, and that's a warning sign we should all be paying attention to in the end. It's up to us to decide what to do next. Will we continue to invest in this stock market, or will we take a step back and reassess our options? One thing's for sure, the current situation is a wake-up call for all of us to take a closer look at the global economy and its many challenges.